Welcome to another great episode, and today we're going to take a look at how to find great stock setups, and this is going to be super simple and easy for beginners. Stay tuned. All right, so if you're brand new to the world of investing, I'm going to share with you some tidbits and insight here on how to look for great stock setups. Now, this is a little bit different than what I normally do, but it's very related to my other channel and website. If you go and take a look there, we talk a lot about investing, trading, more so on options, and you can see that at tradersfly.com, and there's tons of other courses and classes. But in this video, in this episode, I'm going to share with you kind of the simple way to investing. So if you're kind of new, if you're just getting started, you're a beginner, that kind of thing, we're going to go into a couple of quick charts, and we're going to go into some simple diagrams. So in other words, if you're looking to invest in stocks, and we're looking at, let's say, a stock chart or stock prices are going like this, you might say, okay, well, I'm going to go ahead and put some money in here, but you really don't know when the bottom is or when's the appropriate time to invest. But let's say you're interested in getting into a stock like Apple. What you might want to do is go ahead and consistently, if we look at our time frame, okay, and let's say this is 12 months, we want to go ahead and consistently start adding into the stock, maybe 3-4 times a year. It could be 6 or 12 times a year. Again, if you're doing it every month, so you'll go ahead and add a little bit here, add a little bit here, add a little bit here. And what this does is it distributes your risk across different points in time, across different prices of the stock. So let's say the stock price is 100, then it's 110, 120, but you never know when that pullback is. So that's why a lot of financial methods to investing is just continue to invest every single month or add money every single month, or at least at a consistent basis, so that way you don't lose out on dollar cost averaging. So that's where we're really getting into, is dollar cost averaging. But what's a bit of a smarter approach to dollar cost average? So if we're kind of looking at this for nice, easy setups, now, typically I use TC2000. This is the stock charting platform I normally use. It is a paid version, but for a lot of beginners or people that are just looking for simplified versions, you can use kind of tradingview.com. There's barchart.com. There's stockcharts.com. So there's a lot of them out there. And when we're looking into something like this, what you can do is go into the indicators section way up here at the top. And then as you go into this indicators area, you can go in, and once I have the indicators, there's some built-in ones, and you already see it. I have a yellow line. This is the exponential moving average. So I'm go in, there's a moving average, and there's an exponential one. Now I'm going to add another one in here. And what this does is put in those exponential moving averages right there on the side. We'll hit the gear icon, and what we're doing is we're just adding in another moving average. And what I have for the first one is a 20-day, but I will do another one that's 10. So why 20? 20 is 20 trading days in a month. You could do 10 if you like, or you could do like 50. So I'm going to do 50 on this one, maybe a little bit less. So you can see there's a yellow line and there is a blue line here. So what you do as for the investment strategy or concept of how to look for great stock setups is, let's say I'm interested in investing in Apple. Okay, so if I'm interested in investing in Apple, all I'm doing is waiting for that pullback and looking to get into the stock. Now, again, if you're constantly adding money to this, what you can see here as an example is this stock is selling off right here. So we're selling off, we're selling off, we're selling off. And then eventually it makes this turn. And when it makes this turn and it crosses that line, as simple as it is, crosses that line, there is your entry or add point. Does it really matter if you're like 1 day early or 1 day late? Not necessarily. And just kind of getting in right there, and then you'll see then that stock continues to move forward. So if you kind of went ahead and used this throughout, let's say over about a year's time frame, so we'll just go into about January here, how many times would you add? So let's take a look at this. So right here, there's one time, then the stock goes up, pulls back again, and it crosses back over. So there's a second time, then again it crosses under here for a little while, and then there's a third time. So in the 2021 time frame, you probably would do about 3 to 4 times of adding to this position. Now, if you want to do this more frequently, like let's say you're not as long term of an investor, because 3 to 4 times a year for you may not be enough. If you want to do this more often, then what you could do is set this time frame instead of 20. go down to maybe, let's say, 10. So you could do just a 10-day time frame. And now I'm looking at this daily chart. This is a daily chart. Every tick represents a day. And what happens is now I have more signals. So I'll typically have a little bit more signals. And if you need even more signals, you could do, like, let's say, a 9 or an 8. The problem sometimes with doing like an 8-day time frame is you'll get a lot of like fake signals. So let's say it comes here, then you'll add again here, you'll add again here, you'll add again here. So you'll be adding much more. So you have to find a time frame that makes sense for you. I find typically for most people, like, 15 to 20 is kind of a good range. It also depends on the stock. So let's say I'm doing something like Netflix here, and what you'll be able to see here is there's not going to be a lot of adding opportunities in this case, simply because that stock has been trending higher. So what you're looking for is, okay, well, if a stock is constantly trending higher and bouncing off of areas, that could be another type of strategy. So anytime it comes back to those moving averages, right there, you add, comes back again, you add, kind of breaks above it, you add. Okay, so there it is, it's touching those areas. So that could give you another area or way of adding to these positions. So then you have more signals to go off of. So you could either do it off of a bounce or off of a crossover. So let's take a look at maybe 1 or 2 more stocks. So let's go to Disney today, which is selling off a bit harder. And again, I'll shift this time frame to be more in the 20-day space. So now as we look into this, you can see we haven't had a lot of signals. There's been a lot of choppiness here recently, but let's look at the previous year of 2020. So what you could do is, as you go into something like this, you could say, hey, it's crossing over. Okay, so here 2020. Okay, so here it is, where stock's selling off, and then we cross over. There's one. Okay, crosses under or bounces. You could say there's another one. Goes under again, there's a third one, comes up, there's a fourth one, goes under now, and then here's a fifth one and a sixth one. And now you've kind of accumulated a lot of stuff in this area, and then eventually that stock starts to head higher. So again, this is kind of a simple method and a simple approach to really investing. If you're looking to find great setups for stocks, you could do this with any stock that you wish. It doesn't matter if it's Amazon, it's no different, or something cheaper. You're just looking for a simple crossover, and you just adjust those crossovers or bounces on those crossovers. So you can see there's a bounce anytime that it happens. So there's a couple crossovers here. So you can see there, I'm adding to those positions, and that way I'm not buying way at the top. That's kind of the big point here, is you don't want to be buying all the way at the top. So you're doing it kind of on that crossover, and anytime there's a crossover, you're going to add to those positions. Okay, so anyways, I hope this helps, gives you some insight to looking and finding for great stock chart setups. If you're having a little bit of trouble understanding these charts, definitely go into the Traders Fly website. There's a handful of getting started videos here, especially things about charts, learning how to read charts and that kind of thing. Just check out the blog. But if you want to take a look at other personal finance videos that I have, just continue to visit our website at MyLittleNestEgg.com. Thanks for joining me. Hope you enjoyed this video, and I'll see you on the next one.